Well, good morning, traders. Today is Monday, October the 10th, 2022. This is our weekly trading preview and market analyses. Let's go ahead and jump right in. There are a couple of things that I think are interesting as far as setups go for this week. And we talk about this all the time in the trading room. All we really look for is opportunity. And I think that this week will again present some opportunities for us. So let's take a look at what we're taking a look at from a technical perspective. And then let's look at some trading ideas. And then let's look at the overall just sort of where we sit in the marketplace and what we think in terms of potential movements for the week. We do look at a matrix of technical indicators, moving averages, and pivot points, sort of combine those all together, and that gives us a rating for the market, whether it is an overall sell or buy or neutral rating. We did pass through the neutral rating last week, which is always, it was a very, very successful day for us, and those are always tricky ones to trade. So I was very happy with that result. But we look at these technical indicators, we look at this matrix every single day in the trading room on a daily basis. But this is a little bit bigger picture. This is more of a 30,000 foot view. This is a weekly view, and it still continues to rein in with that strong sell indicator. We do have the pivot points still sticking down here around 36.35, and I think that that's interesting. You know, we're trying to fight back a little bit on the futures right now, but still just above that 36.35 level. That 36.35 level for me, at least today, Monday, as we're getting this week kicked off and started, is a really, really big demarcation point. I do have a long E-mini position on, pretty decent sized long E-mini position that I kept on from Friday's close. I cash flowed it for a few $1,000s there with a covered call that I still have on today. But I did that primarily because, well, we are obviously in a sell mode here. A lot of the indicators that we look at, primarily the stochastics and a shorter term RSI, are showing that we are oversold. The Williams is always usually one of the first indicators that gives me an idea of whether we're oversold or overbought. It's showing oversold as well. So I do think that there is a chance that we can get a little bit of a bounce today. But the overall rating, obviously, as you can see, it continues to be bearish as we look forward to where we're going to be going this week. I've talked about this a lot. I call it the cliff. We have been sitting on this cliff several times here, way back, obviously, in June when we initiated our low of the year. We bounced pretty hard off of that. We actually broke it here not too long ago, but we're able to snap back quite handily. And guess what? We're sitting right back there again, once again. So again, I always have support resistance areas. I have demarcation points where I'm looking to put my strike prices on my trades. But I will tell you that there's a lot less to work with, I think, on the downside than there is the upside in terms of looking at support levels versus resistance levels. So everything, again, that we're looking at on the chart essentially continues to be bearish in nature. That doesn't mean on a daily basis that we're going to be going long or that we won't be going long, but the overall bigger picture, again, still down. If you look at the overall indices that we usually look at, you can see that there's pretty much an in-sync pattern there, although the VIX continues to just be broken. It's not really giving us much of an indicator like it used to. That used to be a great trading vehicle for us, and it hasn't really been as of late. You can see that the Qs have really been the ones that have been pounded down the most, with the Russell being sort of the strongest one. And again, that cliff that we talk about so often on the SPYs, they're all sitting at this sort of big demarcation point. And again, I think that that means that we're going to potentially see a little bit more chop, which was great for us last week. As a trader, that's really what you love, is the chop, especially if we're day trading with our zero DTE strategy. and then we'll see a move. But we're not going to sit on this cliff forever. We will get a scenario here where we verify that cliff once again and we shoot higher, or we just drop off of the cliff, one of the two. But just to sit here for too much time, I don't think that's really what the market's going to be doing. So we want to be agile here. We want to be flexible in what we're doing. We do look at the monthly sector rotation. This is a tool that we use to try to find areas or sectors of the market that are either overbought or oversold, areas that are having activity and giving us maybe opportunities to have a reversion to the mean trade. And, obviously you can see that from a scenario here over a 1 week, a 2 week, a 1 month, a 3 month, and a 6 month period, that it has really obviously been communication, which has been hit really hard, and of course real estate. Real estate sort of goes without saying here. But we've been working the healthcare sector as of late. It has been very oversold, and you can see that it has sort of rewarded us with that. While it was very, very oversold over time, it's starting to rebound a little bit here. We continue to work the healthcare sector. We have a nice trade going on there that we've cash flowed for several weeks now, and we'll probably continue to work that here for the foreseeable future. But it's always interesting to see where the activity is in the sector analyses, and that does help us understand, if we're looking for shorting or long opportunities, where we can go. If we look at the heat map, the 1 week heat map, week over week, this was 2 weeks ago right here, and then this was last week. So it doesn't seem like last week was a very good week, but the market actually held its own on a week over week basis. There was obviously some weak spots in the marketplace, but certainly looked a lot better than it has over the previous week. The previous week, you can see what the market did, and then this was last week's results. We were finally able to turn in some positive performances, and the Russell really was the standout last week, with the SPY coming in just behind it, the SPY. NASDAQ, again, continues to be quite weak. We had a really, really powerful setup this past week in our 4-day to expiration trades, where we took a look at this and we understood really where there was a demarcation or a differential between the SPYs and the Qs. We trade both of these every single week in a 4-day to expiration strategy setup, and they work very, very well as a companion trade because they do vary, they do differ, and we usually like to try to enter these from different sides, and it really smooths out the trade. You would think that you would only need one index to trade, but they are quite different on a day in and day out basis. Over a year, maybe they don't vary too much, but on a daily basis, a weekly basis, they really do. So we had seen that weakness in the Qs previously, and that one did look more like it was going to rebound, and that worked out quite well for us last week. We look at the put-call ratio. That just gives us an idea of market sentiment. We use the put-call ratio along with the fear gauge, and actually the put-call ratio is part of the fear gauge, but I do break it out separately because that ratio of 1 is sort of critical. We're considered, bearish when the put-call ratio is high. We're considered bullish when it's low. 1 is sort of that demarcation point. Last week we were at about 1.1. This week we're almost just flat at 1. So we're not really getting any conclusive information there on the put-call ratio in terms of whether we're oversold or overbought. We do have a very, very nice expected move this week. Again, anything above 100, I will take. We have had several weeks of 60, 70, 80 point potential expected moves, and that just makes it really, really tough for us from a premium standpoint. So last week was 121. It gave us all the premium that we needed. There was very rare situations that appeared for us last week on a day in and day out basis where we didn't have the premium that we wanted to have to build the trades that we were expecting to trade. So this week should hopefully be even better here. And we do have some news catalysts too that might help us along the way. I like to always look at a heat map as well. It's just another visual way of sort of seeing open interest and seeing where the activity is. And you can see sort of that cliff if we talk about. You can see all of that open interest down there. You can see the vacuum. I've talked about this sort of vacuum area right in here where the market was sort of in a just basically a free fall coming down lately, but just before that we were shooting up. Not a lot of areas of demarcation inside of that. We're sitting right back down on this support level again. I think that we are headed down lower, but you can see there's a lot of open interest sitting down there, and it's going to take a little bit of work to continue to work through that. We're not going to be in a vacuum where we can free fall like we have over the last little bit. We do look at, as I said, the fear, greed, sentiment reading, and we're not getting that capitulation in the marketplace. We used to use the VIX, which is also part of the fear and greed index, along with the put-call ratio. We used to use that as a better sort of indicator in terms of, whether we were, completely oversold or not. In terms of fear levels, the idea was when the VIX is low, it's time to go. When the VIX is high, it's time to buy. But the VIX doesn't really work like that anymore. And we're still not pegged down here in that extreme fear area where you would think we would get some capitulation in the marketplace. We still are waiting for capitulation to take place in the marketplace. If we look at the open interest areas in the marketplace, that's always something that I think is important. Is, as I look at my levels and I try to calculate levels of support and resistance and where the market might stop or pause, this is obviously a big part of that. And we've talked about these levels before over and over again. As we sit right now on the futures, again, this is Monday morning, October the 10th. Right now we're at about 36.45. That's where we sit right now as I film this. So we're right in this area right in here, just below this level. And so I've talked about the sort of pivot point, if you will, of 36.35. That's right down in this area right in here. It's right in this valley. It's right in this gulf, okay? If we push up, we're going to start to hit a lot of well, you can see really almost everything that we're working with now are puts. That's where the most activity is on the put side of the equation. But you can see if we push up a little bit, we hit a big wall. If we start to push down, we hit a little bit of a wall there as well. So for me, again, I'm thinking this 36.05 level is very important, and this 36.50 level is going to be very important. There's obviously some other demarcation points that you can see there and take note of if you would like, in terms of where the open interest is, where the volume is. But for me, as I look at the marketplace right now, I'm seeing resistance areas of 36.60, 36.85, 37.05. I like to say 3,700 a lot, but it's really 37.05, and then 37.30. So let's make a note of these on the resistance side. On the upside, 36.60, 36.85, 37.05, 37.30, 37.60. I know that's horrible. 37.60, 37.85, and then 3,800. 3,800 is big. So those would be the resistance levels to the upside. That's to the upside. To the downside here, it's a little bit more murky for me. I think we have support down here around 36.30. Again, we're sitting at 36.46 right now. We were down at this 36.30 level for quite a bit last night in the futures. And so I think that we may have the opportunity to see 36.30 sooner rather than later. But 36.30 on the downside, and then 3,600 is a big level for me, and then 35.80. And honestly, below that, guys, below 35.80, this is where we're at today, right now as I'm speaking. Below 35.80, I don't really care. We start to break down below this sort of big wall here around 35.90. We get below this level of 35.80, and to me, it's just kind of look out below. So that's sort of my setup. That's my areas that I'm looking at for this week. Some trading ideas that we have online for this week. There's a couple of things to think about here. Obviously, we do have some news items that are coming into play here this week that I think are going to be big factors later on. The ECB and the Fed are speaking throughout the day on Monday. And then today we are going to be, again, back to our zero DTE strategy. We're going to be reapplying our IWM. We had a great week last week with our IWM credit strangle. We are going to be redoing our Q for DTE. We have a SPY, one side of the SPY trade from last week that we rolled to today's expiration. So we'll be looking at that here today to work on. We do have a PayPal credit strangle that we've been working every single week, and we rolled that from last week to this week. Some interesting news. I won't go into it in this video, but PayPal doing some interesting things with the news items that you can just Google yourself if you'd like to find them. But I think it might have some adverse effect on the stock here this morning. So we may need to be working a little bit on our PayPal credit strangle today. We'll have to see how that goes. And then I did take a unofficial trade in our trading room on Friday with a long E-mini position. I still have that working today. I covered it with a covered call after the close on Friday for about $2,000 of income. I'm looking at that right now, and I've already sucked up about 1,000 of that income. So we'll have to see what I do with that. But even though it's not an official trade in the trading room, it's something that I want to look at to obviously continue working for today. Potential bonus trades. We didn't do a Theta Ferry last night. A lot of Sunday evenings we do. But I didn't put one on last night. I just didn't really find let me put it this way, the levels that I wanted to use didn't have the premium. So it ended up a couple of our members, looks like it, I'm looking at the chat room right now, looks like a couple of our members did do them and they worked out okay, but we'll do one tonight. Or at least we'll take a look at doing one tonight. Tuesday, we've got UK unemployment numbers. We got some Fed and ECB speak coming out throughout the day. We got the U.S. crude oil stock change levels coming out. That should be, and this is usually not a news item that moves the market, but I think it will be interesting to see kind of what that does to the market, the oil market, potentially on Tuesday. President Biden has really been drawing down our strategic oil reserves, and it's not a good thing. It is not a good thing. So it'll be interesting to see if, in fact, that number does move oil at all on Tuesday. We will be in the scalping room, scalping full-time on Tuesday, but we'll still be doing a zero DTE trade inside of our live trading room. We're going to be working on our DIA trade as well. We put on one new leg to that trade last week to the ladders, and we're going to add to that ladder this week on Tuesday. Our XLV trade has continued to work well, and we had a cover on that, or an income enhancement portion on that trade last week that expired fully profitable. We'll be re-adding that here on Tuesday. We're going to continue to try to work our pairs trades pretty heavily this Tuesday to see. We got two of the original three that we put on. We want to see if we can try to get those things into the profit zone and move them on so that we can start some new pairs up. And then Tuesday, we will be adding to our gas trade, our nat gas trade. We've got the put side in already. We just need the call side. So Tuesday, be a fairly busy day for us. Obviously, after the market closes, we'll look for another Theta Ferry trade. Those have just been awesome trades. Wednesday, we do have GDP numbers coming out of the UK, and we've got PPI numbers. So we're going to start getting into this week here where we start to have Tuesday and Wednesday, we're going to start to have earnings coming out. So we're going to get back into the earnings swing. That's going to be a big deal. We got PPI numbers coming out, and then we've got CPI numbers coming out. And then last but not least, we've got retail sales numbers coming out. So there should be some potentially market moving news the latter part of this week. Again, for us here in the U.S., The UK GDP may actually move the markets here. It may matter, but our PPI number will probably be something to take a look at as well. On Wednesday, of course, we're going to look at our 0DTE index trade, and we don't really have anything else on the docket for Wednesday. I'm sure that we will probably find an earnings trade potentially on Wednesday to add to our mix. But as of right now, I don't know which one of those companies it's going to be. So we'll take another hard look at that on Wednesday. I do anticipate we'll probably do an earnings trade of some sort on Wednesday, but we'll have to see what that shapes up like. Theta Ferry trade overnight once again, of course. Thursday, we do get the jobless claims numbers coming out and CPI. That's going to be probably a market mover. As well as crude oil inventory numbers. They come out a day later because of the banking holiday on Monday, although the markets are open on Monday. And then we do get the Chinese CPI number. It's after our market hours close, but it should be interesting to see what, if anything, it has effect-wise on the futures market. So we'll be watching that in the after hours. Thursday, it's going to be a pretty busy day. We've got our 0DTE on tap once again. We'll be in the scalping room, scalping full time. We're going to be working on our Rev trade. That's been a very, very successful trade for us. We're going to be working on that a little bit. We're going to be adding to our gold ladder. We're going to be adding to our oil ladder. We're going to have a brand new Dragonfly trade, and we're going to have a brand new bear market trade. So it's going to be a busy day on Thursday. We're also going to look at the Theta Ferry trade overnight. So busy, busy day. That could be our busiest day of the week. At least as far as things are shaping up right now. Friday, we get retail sales and the University of Michigan Sentiment Index that can, in some instances, move the marketplace. Just depends on how big of a swing, how big of a variance it is between what was expected. But those are potentially market-moving news items for us. On Friday, we like to usually keep it simple. We're usually pretty worn out by the end of the week here. Usually we will get in 20 to 30 trades during a week, and this week should be no different. So Friday we're going to stick to the 0DTE index trade, but I do think we haven't had the setup really that has been one that I would just be really, really excited about to hold a Theta Ferry trade over the weekend. I think it's been 2 or 3 weeks now since we've had a Theta Ferry trade over the weekend. But I think this week might be the week that we've got the premium to work with. We'll have to obviously see what these news items, Wednesday, Thursday, and Friday, do to IV. But I think that we could get a potential Theta Ferry trade over the weekend on Friday. At least I'm hoping for one. It obviously will be dependent on premium. Quick overview of our performance. You can see that we're up to 188 winners with 7 losers now on our 0DTE. That continues to just be a really, really solid trade for us. Make sure that you use the private video link. I send a email and a training orientation step-by-step video for you guys to figure out how to get to this link and review all our videos, but we still get questions all the time. So make sure you utilize the private video link that we provide you. Every one of our Zoom sessions is recorded. We are the most documented trading room, I think, online. So you can see all of that anytime that you want. Our 4DTE trades, we are up to 118 wins and 7 losses. We do have that SPY roll from Friday that we still have on today. So we'll have to see where the disposition of that is. We're going to be working that trade a little bit more today, but been very, very successful and very happy with our 4DTE trades. Our IWM weekly credit strangles, we went through a couple weeks where they were so-so. They were profitable, but they were so-so. And then these last 2 weeks have just been absolute home runs. Just absolute massive home runs. 43 winners, 0 losers with our IWM strategy. It's been awesome. Pairs trades hasn't changed. We still got those 2 out there working. So we'll continue to work those this week to try to move those into the profit zone. Bear trade, market trades, we haven't added to those, but we'll have a new bear market trade this week. So that should be exciting. We added another positive Vega spread using the DIA. We're up to 8 of these. All 8 of them have been winners so far. We do still have 3 open, so they're still working. But so far, no losers in that category, and that's been nice. Our Tuesday, Thursday butterfly 0 DTE days. The idea with the Tuesday, Thursday non-Zoom sessions was that we would focus on the butterfly aspect. The problem that has been created with that is that we do butterflies with profits. We only do butterflies with profits. We've never ever lost a penny of our principal in a butterfly because we never put any in. We only put profits from our setups earlier in the day into the butterfly. Well, sometimes the market doesn't cooperate with us on that, and we don't have the profits to put in. So lately, what has happened is that our Monday, Wednesday, Friday 0 DTE sessions have been the days that we've had the money for butterflies. So I do think, just from a simplicity standpoint, next week, I'm going to combine all of the 0 DTE statistics together, because they're starting to just become sort of, there's not really the demarcation anymore between what we do Tuesdays and Thursdays versus what we do Monday, Wednesdays, and Fridays. But again, it's obviously been amazing. 45 total trades, 44 winners, 1 loser. Scalping, I had some errands and some stuff I had to do on Tuesday, which is kind of the nice part about scalping. You don't have to always do it if you don't want to. But Thursday was an absolute home run. It was just one of those days. Started out of the gate really strong. Started out of in the morning up almost $1,200 right out of the gate, and it just kept growing as the day went on. It was just it's just one of those days when it clicked. It just clicked. So I pushed all day long. I was tired at the end of the day. I took a nap after the market closed on Thursday, but it was a good day from scalping standpoint. Dragonflies and double diagonals. Again, we don't have any new ones there, but we will be getting a new one this coming week. So I'm excited for that. Our SSO trade, we're working on that. We're going to create a better timing model, I think, there. I don't think that we quite have the edge in the SSO trade that we want. So we'll keep working on that a little bit here. Our Theta Fairy trade has been awesome, just awesome. 39 total trades so far this year. Well, it's really only been the last month and a half or so that we've done these, but we do them almost every day. 38 of them have been winners. Only one has been a loser. And that one, if you would have held it, would have been a winner too, but that's not really how we trade this strategy. The gold ladder, 7 total trades and 7 winners so far. We do, again, have some of these gold ladders, 2 right now, I believe, that are open and working. But they're all in the profit zone, and we haven't had any losses in that category as of yet. Oil trade, we're up to 8 total ladders so far. We did take a loss on one of them, but there's really good premium in the oil trade. So we'll have to see where we're at, maybe on a quarterly basis, maybe sooner. I don't know. Maybe on a monthly basis, we could look at what the actual ROI on these trades are. But the oil ROI of all of the trades that we do is one of the highest potential ones. So that one looks really good. Our AST program, that's our separate program. It's an investing program. It has just been absolutely amazing. We spanked the market last year in 2021. We are doing better this year, percentage-wise, in terms of outperforming the market. Market's down about 24% year to date. We are up about 18%, almost a 100% outperformance of the market. So again, the AST has just been absolutely fantastic. Not just from the standpoint that we're making money while the market's losing money and that we're outperforming the market by such a great amount, but that we're taking less risk. That's the alpha. That's the key component of this, is that we're taking less risk and beating the market. We do have free trials if you want to check out what we are doing. And we do have a double your money back guarantee for your first month subscription. If you jump into the trial, you like it, you want to subscribe to a month of our service. And if at the end of the month you don't believe that this was absolutely life-changing and the best trading program you've ever been a part of, and you followed along with all of the steps that you needed to do to be a part of the program, I'll give you double your subscription money back. So we've tried to remove all of the hurdles for anybody that is serious enough to want to try to improve their trading. I always get these questions: who are good candidates for our trading room or the AST program or the scalping room? For the live trading room, it's best for experienced traders. You need to know how to trade. You need to know what a strategy is, and you need to know how to manage your platform, how to roll trades, how to adjust trades, how to track your cost basis, what your P&L in a trade is. Because when we are trading, it's really hard to come in and try to handhold you in those things. So you need to be a trader that knows how to trade, but maybe you just need a system, a business plan, a one-on-one mentor, somebody to help you with higher level strategies. If you'd like to come someplace and trade something that you've never traded before, an idea that is new to you, this might be a good fit. If you are already in a trading room and you're not getting the service that you desired, you're not getting transparency, you don't have a track record that you can look at, you don't have the Zoom recordings that you can go back and watch the trade happen in real time so that you can see the P&Ls. You don't have unlimited contact with the person, me, that is running the program. You are only in a room that is trading 0 DTEs. That's all they're giving you. That's not a value, guys. Maybe they're trading it statically versus dynamically. Maybe the trades, their 0 DTs, are set up in a way that they either work or they don't work, but they're static in nature. And we trade dynamically. That's why we have the results that we have with our 0 DTE. And maybe their 0 DTs are not giving you the opportunity to make at least $1,000 a day. There's no guarantees in the marketplace. I can't make you any guarantees in terms of what the market's going to do. But I can tell you that every single solitary day, we find setups that can make us $1,000 a day. Now, it's up to us as traders, it's up to you and I to be able to act on that information appropriately to garner that $1,000. Because again, there's no guarantees, but the opportunities are there. So if you're trading butterflies or you're doing something with a 0 DTE where you're making $100, $300, and that's a best case scenario, you need to find something that's better. And lastly, our 200% guarantee. I think I think we're the only place I know of that's going to give you that type of guarantee. Our AST program, that's for investors, not traders. This is a passive system. It's an asset allocation model. It takes 5 minutes a day to make a couple small portfolio adjustments. Set it, forget it, walk away from your computer. It's good for people that are tired of excessive risk. If you want to take what we have been doing, which is statistically half of the risk, half of the standard deviation or volatility of the market, then that's probably a good fit. If you are impressed with results, if you don't necessarily know that much about investing, but you are interested in actual documented results, and you like the fact that we doubled the market return last year and we're doubling it this year, then that's probably something that you can look at. But the AST program has just been a fantastic investing program. Our scalping room, who is it good for? Well, if you're a really committed trader, it's good for you. If you're somebody who wants to trade full time, if you want to have the opportunity to make money every single solid day, scalping is great. It's also good for the most uncommitted trader. It's great for traders that say, hey, you know what? I want to maybe trade for 30 minutes a week. That's all I'm interested in, is trading for 30 minutes a week. And I want the ability to make at least $1,000 in that 30 minutes. Well, scalping can be a good opportunity there. I made $1,400. We made $1,400 in a live trading session this past week just off of a news catalyst. And we've got some big news catalysts coming up this week, again, with the PPI and the CPI and retail sales. And, that's a 30-minute to 1 hour window. And that's all you need. If you're looking for daily income, if you're looking for a way to generate daily income, that was a big thing for me as I tried to move from a day job to being a full-time trader was, hey, here's an opportunity to potentially make $500 to $1,000 a day. Again, there's no guarantees. You have to be on the right day at the right time, and you have to be able to take advantage of those opportunities. But that's really obtainable. That is a real number that is really obtainable on the right days when we get the right candle size and the right candle movement. So that's kind of an idea of scalping. So a couple things just to keep in mind. I'm going to whet your appetite for this. There's nothing at this website yet, but there will be soon. StockMarketMastermind.com. We have our first bit. We got waylaid a little bit by the pandemic, but we are back now, and we're going to have our first mastermind next year in May in Cabo San Lucas, Mexico. We have a slotted opening for I think 50 of our traders. So it is going to be amazing. I would imagine that it's going to be sold out, but that's okay because we'll have another one later in the year in October in Barcelona, Spain. So it's going to be awesome. I'm excited to get into a live format for you guys, but just kind of keep that in mind for right now. May of next year, Cabo San Lucas. If you do want to try our Zero DTE program, you can go to tryzerodteforfree.com. We'll let you trade live with us for 7 days. If you want to try the investing asset allocation model, you can go to tryastforfree.com. You get 2 weeks of free access there. You'll have a really good idea of what our asset allocation looks like. If you want to come scalp with us, you can try scalping at tryscalpingnow.com. And again, there's never any guarantees, but we know that there is every single day a good shot at making $500 to $1,000 based on a decent day's movement, decent day's work. So check those things out if you are interested. And I am, as always, interested to hear your comments. Let me know what you guys are working on this week, and we will see you guys in the trading room here very, very shortly.